This is the weekly review for the week of February 6th to February 10th, as well as this week's Sunday preparation. So, coming into the week here on Monday, I was looking for price to trade into the mean threshold of this daily fair value gap and form a potential long setup that would take us to this volume imbalance, consequent encroachment of the August monthly candles wick, and also the weekly order block mean threshold. Um, and that I was or am anticipating would be the smart money reversal of this potential daily market maker buy model here. Um, we did not end up doing that, and we ended up trading down into this daily bullish order block. So going into Monday's trading, Monday I ended up not really doing anything because, let's see, where's because price had already taken Friday's low um, on Sunday's opening, and we didn't really have a meaningful reaction off of the mean threshold of this daily fair value gap. So really, I just was sitting still on Monday and just kind of tape reading price to see um, what was going to happen. And I was just watching this. We had a hourly fair value gap up here, and we hit this M15 order block, created some equal highs, had a M5 order block here. We disrespected that and broke this intermediate term low here. So I was just tape reading this potential setup. We never got back up into premium to get an entry. Um, Came down, dug deeper into this fair value gap, and then the 9:30 open ended up rallying higher here to take out these relative equal highs, but we didn't form any bullish setup to take those. So I was just continuously watching this and saw this bearish SMT with London, then this lower time frame SMT and this displacement down that took the interim session low or the low of the day. But then we had another SMT. So I just noted this trade. I wasn't planning on taking this at all, but I was just watching this fair value gap in premium as well as the mitigation block, and we completely ripped through those. So here we were in between two SMTs, and kind of at this point here where we violated these PD arrays around 11 a.m., I had a feeling that Monday was just going to be a seek and destroy price action type of a day. So I really just didn't pay attention to the charts for the rest of the day. And that's pretty much exactly what happened in the PM session, where we had a lunch low SMT bullish, and then we ended up having another bearish SMT here. So didn't want to be trading at all in this because it's low probability. And it's a Monday, so Monday we should anticipate consolidation. So that was all of Monday's trading. And then going into Tuesday, I was thinking that we could potentially raid Monday's low into this daily order block, which is this box right here. And then that's the opening price of the daily order block. So I thought we could potentially dip down in here and get a SMT of previous day's low, and then create a bullish setup to target that daily volume imbalance that I noted earlier. We did end up getting a previous day's low SMT, but not in the way that I wanted to. ICT noted this setup here that ran these relative equal highs, and we broke this intermediate term low, came back up into the balanced price range order block. And there's also a volume imbalance on the ES chart, not on this one, the CFD, but on the actual futures chart, there's a volume imbalance in here. So there was a lot of confluence, and then price ended up selling off to take the London low. And after we had this SMT and had this 1105 bullish candle here, I noted this bullish setup and I set limits here just to target this imbalance, just a short-term scalp, because I still wanted to see price go lower, but we had this kind of clear bullish setup here, so I thought we were going to potentially take some type of buy side up here. So I was just targeting this low resistance liquidity run. We never came back down into discount, and then price ended up rallying away. And then this was the Fed news during the lunch hour, and we ended up respecting this bullish order block and trading higher, taking out previous day's high, and then coming down and take previous day's low. So we kind of ended up having another seek and destroy day. No clear setups in here to take. So that's how Tuesday ended. The displacement or volatility here didn't really give any clarity to me in terms of the direction of the week, because we took both sides of the liquidity and ended up rallying higher. The only thing that I noted going into Wednesday was this M15 fair value gap here in discount, and this high SMT with a Friday high. So I was potentially looking for us to trade back down into here on Wednesday's trading. But Wednesday I didn't, or I wasn't able to look at the charts at all due to work. So everything I noted for Wednesday was just hindsight. But there really wasn't any clear entries. I noted these equal highs being taken out with SMT, but after this displacement down, we never retraced back up into a premium to get short. But if we did, and I was watching it live, I would have definitely set limits here to target the M15 fair value gap. I think that would have been logical to me if watching it live. And we ended up continuing lower, breaking market structure. Came back up into this order block in the PM session, taking out lunch high, breaking market structure, and then having the YouTube model form here, coming back up into this fair value gap and order block here to take the AM session low. So this trade wasn't bad, actually. Then going into Thursday, I honestly missed a lot of this price action because I was trying to watch or follow ICT's tape reading on Twitter, but that just honestly confused me so much more. And at the end of the day, when I went to review this price action, the bearish setup looked very clear in terms that we had a failure swing with previous day's high, had this 3 drives pattern up, broke market structure down, and also here we were in premium of the current weekly range. So from that low to that high was the current weekly range, and we were sitting deep in premium here, had that bearish SMT, and then all of those other bearish confluences in terms of the 3 drives, breaking market structure down, And this sell setup here looked pretty clean. On the ES chart, there were volume imbalances up in here. Came back up to the mean threshold of the order block for a sell. Broke market structure down. And we ended up coming back up to this order block here, respecting the mean threshold, violating this bullish order block here prior to that, and continued breaking market structure lower. And pretty much we just had OTE retracements or retracements into premium all the way down here until we got to previous day's low. So this would have been the obvious first draw on liquidity, this low resistance liquidity run here. But then after we dipped into that, we formed a new dealing range from that high to that low, retraced to the fair value gap in premium, formed a new dealing range from that high to that low, retraced to the fair value gap in premium, new dealing range from that high to that low, retraced to the fair value gap in premium, and then this was lunch, close to lunch session here. Came back up to this order block, and then lunch took previous day's low. So in hindsight, this was definitely a clean day that I should have seen. And also we had such a large range on Thursday here because Wednesday was an inside day where we didn't take Tuesday high or Tuesday low. So ICT says that inside days lead to expansion on the previous day or on the subsequent day after the inside day. And then we dip down into the daily order block here, which is this gray box here. So then coming into Friday, I saw how the low of the week potentially formed here, and we took out previous day's low. We were inside a daily order block, and we had this displacement up here. So right at this candle here at 820 on the closure of this candle, my bias was bullish, and I was looking to target this low resistance liquidity run, and potentially after that London high, because this looked like a market maker buy model with these relative equal highs up here being the original consolidation. So that bias ended up being right. However, I didn't get a fill on my initial limit here. So right here at this 820 candle, I was drawing my fib here and waiting for price to come down into discount, and this low here, we never came back down into discount. We bumped up a little bit higher here, and then I moved my limit up here. This was inside the M15 breaker here. We have the order block, and then we have these fair value gaps here. We never retraced back down into discount, so my limit at this equilibrium point got swerved, and price ended up trading higher up into the low resistance liquidity run I was targeting, and this was 9:30 opening. And then we had 10 o'clock happen, and 10 o'clock had high impact news. So when studying this after the fact, I noted how I probably should have moved my limit up again, because after we took out this low resistance liquidity run, I thought that this was going to be the low hanging fruit. And after we kind of traded up into it, I just kind of wanted to stay out, because I felt that that was the easiest trade, right? And it would be a little bit more difficult for price to come up and complete the market maker buy model. I wasn't as certain that it would take this high as I was certain that it was going to trade up into this low resistance liquidity run. So that's why I kind of just held off. But looking back, we had price initially respect this order block here. But this 10 a.m. news, I noted that news usually is just manipulation that takes liquidity. And that's exactly what happened. So price formed the new dealing range here. From that low to that high. We had these equal lows engineered, and that's exactly what the news took. We had the Judas swing down to take these equal lows, and then on the M15, because the PD arrays are mainly on the M15, we dipped into the M15 fair value gap here, M15 breaker here. We didn't hit the opening price, but we hit the high of the breaker. So what I noted was that this would have been the nice trade to take with that confluence, sweeping equal lows into the fair value gap order block and high of the breaker. And on the ES chart, we actually hit the order block perfectly to the tick. So that wick there, right? The high here was 40.6975, and the low here was 40.6975. So that was really nice to see. So that was basically the trade of the day that ended up completing the market maker buy model, taking these equal highs and London high here. So after we took those, I was still watching price, and I saw a potential second setup form here with this breaker here, this M5 breaker here, that candle, and this order block here, right? And then I noted the dealing range from that low to that high, and I was looking for just a 1.3R take profit here, and I bought or I placed a limit here at the mean threshold, and we came down. We respected the or I should say I placed a limit at equilibrium. We came down and respected the mean threshold of this order block here. So I just noted that by these lines here, and ended up trading higher. Now I was watching this as a potential bearish setup here, where we had a SMT with London high, broke down, and I was watching this fair value gap to see how we reacted off of it, and we ended up violating this bearish fair value gap, closing above it. So right here at 11:20, I went to go make lunch. I said, all right, this is going to hit my take profit. And then I come back from lunch and I see this, and we end up retracing down, completely violating the breaker, violating the mean threshold, and we traded to the consequent encroachment of this wick. Stopped me out, and then immediately reversed to take the AM session high here. And then for the PM session, we continued with bullish price action, retracing down into this order block here, taking sell side, breaking market structure, coming back down to this order block and breaker, and forming the high of the day up here. So when studying this at the end of Friday or Friday night, basically what I noted was that the $1 million question that I have, and I believe that this is the reason why I'm still not a profitable trader, is because how can we possibly know that on this setup here, price came back down, touched the top of the breaker, and respected the mean threshold of this order block? And on this setup, price completely violates the breaker, violates the mean threshold of the order block, and then still continues to take profit. So I like these two setups here because they're right next to each other on the same day. Price continued bullish, but we violated key PD arrays on this setup and still remained bullish, where this setup didn't violate those PD arrays. We respected the PD arrays here beautifully and went to take profit, where here we didn't and still went to take profit. And I missed this setup and I took this setup, and overall for the week I took a loss. So I don't know how it's possible to identify the difference between these, because I see that a ton in my trades where I'll either miss or my entry will be swerved, like here. Now, guaranteed I should have continued to move my limit up and I would have gotten a fill here based on the new dealing range, but entry got missed here, got back in on a compound entry, stops me out, and then immediately reverses to take profit. So I think if I could figure this out, I would be a profitable trader. So I screenshotted this and printed this out because this is just such a beautiful day in terms of what I am struggling with in price action. Because I could see all of these fucking setups in my sleep. But again, it's to determine like which one you should take. How do you know this is going to retrace so deep and this one isn't? So those are my thoughts. The week wasn't bad, actually. This Friday price action was pretty nice, despite this loss here. But going into next week, I'm going to take these off the chart. The monthly and the weekly don't really give us anything yet. The daily, we're inside this daily order block here. So I'm expecting a potential bullish reaction. Now we also have, which actually I didn't note, this daily, it's not the right one, this daily fair value gap here. And that also lines up with this low resistance liquidity run here. So these fair value gaps. And then I noted this hourly order block here. So the only clear thing that I could see, and then we have this bullish SMT here with the FOMC wick from last week. So the only clear thing that I can see is that on Monday or Tuesday's trading, we can come up into this low resistance liquidity run. I think that'll be the nearest term drawn liquidity. After that, I'm not too sure, honestly, because dollar index looks bullish, right? We dipped down into this fair value gap and are trading higher. So that should mean S&P is bearish, but we're inside this daily order block. So I think we have to see what price does next week. And also we have CPI, so that should give, hopefully, some type of displacement that's going to give the directional bias for the week. So maybe we won't even end up trading into this volume imbalance up here. And Friday, or last week made the high of the month here. I don't know. So I'm just going to wait and see what price does. Maybe we could get a long up into this low resistance liquidity run on Monday or Tuesday or something like that. But then just waiting to see what happens here when price is up here, and maybe if it reaches this hourly order block or H4 order block rather. Then just to note for silver, I got filled on this trade here. We finally retraced into discount of the weekly range into this fair value gap and order block here. So the only other thing I have is another limit potentially below this swing low here, and that's in the discount of the monthly range. So that's the opening price of the monthly order block. The seasonal tendency for silver suggests a low in June. And then we're going to have like consolidation from February to, I think, April or May. So I'm happy that I bought in discount of the weekly range, but then this limit that I have down here is just in case we end up coming back into discount of the monthly range. And if we end up coming into discount of the monthly range, which is this price here, it's probably highly likely we're going to take that weekly range low, and then that's where my new limit is going to be. So I think either one of this blue or orange arrow is going to end up playing out to take out at minimum these highs here. And then for Bitcoin, I'm just watching price. We respected this mean threshold of the weekly order block. The closing prices of those candles took September high. So I'm just watching this right now. Had this intermediate term low break in market structure. Going to see if we trade up into this fair value gap up in here. Also have an order block here. Theoretical stop loss here. And take profit inside this low resistance liquidity run. I'm not going to take this trade, but this is just something I'm studying and putting in my journal to see if this plays out. So yeah, those are my thoughts for this week, and we'll see what ends up happening.